Your small beginning by this this is where we want to do the fact that we can but the closest and instead of on ten down or something there. That's fine. I'm not talking about that.
Okay, so let's start chapter 19. Just talking about it, I'll tell you what problems I need to do. Then we'll go over next week. And you might as well go ahead and write them down now so that way I don't forget. Exercise 19-2, and I'm on page 798. Just tell me what you need to try to work on before you come to class next week. Exercise 19-2, exercise 19-4, exercise 19-7, exercise 19-8, 9, and 10.
That's all.
No, it's not. It's not all. Exercise 19-14.
We don't have 19 that's 14 reasons. Where?
I just gave it to you. Exercise 19-16.
Oh, 14 and 16.
Except
9. 14 and 16, that's all. Oh, don't tell me it's just too much. We got so much to do with the homework.
Yeah, I get it. I get it. You're only gonna do what you can. We're gonna do it anyway in class.
Doesn't matter. I do know me. I'm going to tell you.
And if you can, if you can.
Good
Problem
nothing.
19-1A.
1A.
Problem 19-1A. So I'll go through them one more time. Exercise 19-2. Exercise 19-4. Exercise 19-7. Exercise 19-8. Exercise 19-9. Exercise 19-10. Exercise 19-14. Exercise 19-16. And problem 19-1A.
Oh no, it's not quick. It's not quick study.
No quick study.
Oh no.
No quick study.
Oh my goodness, I put them.
Y'all do those in 5 segments. It's something that's gonna challenge you.
Yeah.
Quick study is not an option. Okay, so job order costing. What do we mean by job order costing?
7.
What's job order costing? When in doubt, read the slide.
Okay, class.
Produce to order rather than mass produce.
First thing you need to know is that job order costing is when we allocate costs based on a single custom job versus process costing, which you're going to learn in chapter 20, which is allocating costs towards each process that goes towards one big job or one big order. So with that being said, you need to also know the difference between a job and a job lot. So if it's a job, that means what? What do you think it means? One custom product. Okay? Job and job lot. So job is one custom product order. Job lot would be what?
More than one unit.
More than one, but it's still custom.
Yes.
It's not going to be 50, but it's definitely not going to be just one. Maybe up to 5 or 10. Small quantity. But that's what a job lot is. So, job costing Notice it says here for job costing, used for production of large, unique, and high-cost items. One-of-a-kind vehicles, you know, the ones they fix up and customize and things like that, that will be considered under job costing. Built to order rather than mass produced. So in other words, a Ford Taurus is clearly a typical car, right? So when it's produced, it's going to be produced in large amounts of cars versus something like, I don't know, a 1950 Jaguar or something. I'm using it as an example. That's not going to be produced, you know, in a bulk. Many costs can be directly traced to each job. So that's really the whole benefit of job costing. We can trace it back to a custom job versus if it was processed, we'd have to figure out what part of the process to trace it back to. It makes it more complicated. So with process costing, we're not really talking about that because that's going to be in chapter 20. However, job costing, special order printing, they're just giving you examples. Building construction, service industries such as hospitals and law firms. Now, hospitals, what they mean by that is, you know how the hospital may have one MRI machine. That would be a job costing type of situation because they built it just for the hospital in question, right? Law firms, they are definitely a part of job costing because generally they don't determine what price they're going to charge until they find out what service they're going to provide to a client, right? Special order printing, custom printing, things like business cards and things of that nature, that's going to be under job costing. Building construction, sometimes if you're building a house, you're not building 10 of them at one time. Maybe one or two projects going on, right? But custom. So the events that lead up to job order costing. First, you're going to receive the order from the customer, right? Predict how much it's going to cost to actually complete it. Negotiate a price. And obviously you want to make sure that the sales price is good, depending on what you did, what you have to pay, right, for materials and everything, and then schedule production of that job. So we've talked about in the previous chapter about indirect, direct materials, raw materials, overhead, and labor, direct labor. So what they're doing is showing you how the job order production ultimately leads to cost of goods sold so the product can be sold. Starting off where? Materials. Obviously, direct materials are going to go or be allocated directly to goods in process. Indirect materials are going to float through factory overhead, just like direct labor is going to go straight to goods in process, but indirect labor is going to float to where? First. What is held in this little bubble here? Indirect labor and indirect materials. Direct goes directly to goods and process costs. Indirect floats through factory overhead first and then makes its way to goods and process. Ultimately, once it gets in goods and process, it's going to go to finished goods. And if it's finished, that means that we have to allocate what cost we paid to get it finished before we can actually sell it. So what are some job order cost documents and why do we need them? We need job order cost documents because that's the only way to track back to what? What the order, what we're producing, right? Job cost sheet. What's on this sheet is obviously the direct materials, right? Cost, direct labor cost, factory overhead cost. How do we know what to do with this? You see how this column, all these columns have this has a requisition and a date. The requisition number is what you need to go back to figure out what is going to be a part of the cost. See, it says the materials requisition is used to authorize the use of materials on the job. This is a materials requisition. This is done for every what? Every piece of material. So you're going to have a requisition for every piece of material, not every piece, but order of material. This is just a quantity of one. So that's why we just have one requisition for that. Cost of material charge to job B15. This is very important. The job number is very important. It's the only way they can track things back. Proper authorization, that means somebody in management or whoever is in charge, supervisor, has to sign off on it. They give you the material stock number. That's the way, again, that they track it back. And the amount requested and the requisition number. Generally, all of this stuff is not going to be done by hand like how they make it look. It would be all in some type of computerized system, whatever they use.
Sage 50.
Well, not too many people use it, but things like Sage, Great Plains. It's rare with QuickBooks, but some people, smaller companies, do use QuickBooks. Material requisition form also serves as a source document for what? Materials used. It's the only way you can track back what has been used. Now, the material ledger card, what do you think this is? If the material requisition is to show the materials that will be ordered and used, and the job cost sheet refers back to the requisition, what is the material ledger card for? What cost?
Per unit.
The unit cost.
Let's look at it for a minute. It's also in your book.
Wait, I don't see it.
You can look at what's on there and tell what it's for. It's not just about cost. They show when they received, right? They also show when they did what?
The
Issued it to the department to be produced, and then what?
the total, and the balance.
Balance.
Okay, now I see.
Job cost sheet. So now that cost from the material ledger card came where? Back here. Does that make sense?
Yeah.
It may, it may not. Accumulate direct labor costs by means of work records such as a time ticket. So that means for every person that worked on this job, they're going to go here, right? The date, the ticket number, and the cost for that labor. This is what it looks like. This is somebody's time ticket. This person, T. Zeller, they worked how many hours? 3 hours at an hourly rate of $20. So for that one particular job, on that particular date, that employee made $60 for 3 hours. So it comes back here. The date, the time ticket number, and the cost, $60, and that goes up under direct labor. Now, they're trying to allocate overhead, right? Because we know that overhead is based upon the people who indirectly, but still somewhat directly related to the product. Something you need to know about overhead when it comes to indirect labor, if you don't ever have, and you might need to write it down somewhere, make a mental note. If you don't ever have an amount for factory overhead, you have to use direct labor as a base and multiply that by what we call the predetermined overhead rate. Okay? So again, if you don't ever have an amount for overhead, and this is something that will follow you throughout the rest of the course, if you don't ever have an amount for overhead, you are to use direct labor unless instructed otherwise. But you are to use direct labor and multiply that times the predetermined overhead rate. Predetermined overhead rate.
Yeah, predetermined overhead. It's right in front of you. You see it?
Well, I'm going to change the slide. So predetermined overhead rate. Now, we'll get into how you calculate predetermined overhead rate later. All you need to know is I told you to use what as your base? You just wrote it down. Direct labor. The predetermined overhead rate here was 160%. So $60 times 160% equals an indirect labor cost of how much? $96. So predetermined overhead rate. This is important. It's also in your book. 786.
Oh, I was right.
Under where it says overhead allocation rate. So your predetermined overhead rate is calculated by taking estimated overhead cost and dividing it by the estimated activity base. In this case, they're looking at labor, estimated overhead cost for that upcoming period divided by estimated direct labor cost for the current period. So 200,000 divided by 125,000, which is how they got that 160% predetermined rate of direct labor. So it says, let's summarize the document flow we have been discussing in the job order cost system. So it's just going back through it with you again, right? Where do we start off? What's the document that you start off with?
Job cost.
Job cost sheets, because the job cost sheets show you what? Direct materials. Go look at it again. We just went through it, but go look at it again. What does your job cost sheet show you?
Oh, yeah, direct materials, direct labor.
What does it show you?
The cost of production, the job completion, and the job delivery.
It shows you the direct materials.
It shows you more than just direct materials. What does the job cost include? Job cost sheet include?
Okay, we already said direct labor and overhead.
So your direct materials, your direct labor, and your overhead for one job, right? Per job. Materials requisition does what for you?
It breaks down the job.
The material requisition sheet is used for you to do what? What is the requisition for? What do you do with it?
To
request what? You're not requesting a job order. Material requisition means you request materials to be used for that job. What about the material ledger? Materials ledger card, what is that for?
It shows what you received, what was issued, and the balance.
Right, what you have received, what has been issued to be used in production, and the amount. And all of it goes right back where? On what sheet? It's up here, folks. Where does it go? No, job cost sheet. I done gave you daggone visuals, and it's in your book. It goes back to the job cost sheet, just like when you're doing labor, right? You use an employee time ticket to record the amount of time that the employee takes to do what?
The job.
Work on a job. And then you transfer that information back where? Job cost sheet with the factory overhead, indirect labor. You don't have any document for that, right? So what do? You use what as your base? Direct labor, and multiply it by predetermined overhead rate. It must be the rain.
Yeah,
It got to be something, because you can't come in here like that next week. Let's examine the cost flows in a job order system. We will use T accounts and start with materials. Again. We all know the process, right? Starts off as raw materials. The items that have not been complete but are also not raw materials anymore are considered goods in process. right? And then the factory overhead. So with raw materials, on the debit side, we care about what has been what? Purchased, right? Direct material, indirect material goes all over the goods in process, and it's no longer considered what at that point? Direct material goes over to good in process. Indirect goes where? Remember that cost flow before? What did we say before? Direct materials go straight to goods in process. Remember that chart before? Direct labor goes straight where?
Oh, to goods and process.
To goods in process. But indirect materials go where first?
To overhead.
Overhead first, then to goods in process. And indirect labor goes where first?
Overhead.
Factory overhead, then to goods in process. It's just saying the same thing over and over and over again. Same thing I just said. Now, this is what's important about this area. When you get down to factory overhead, you have to determine between what is actual and what has been applied. The reason for that is because we need to know if we came in actual or if we came in to just what was estimated. This is the thing, what they're trying to show you. If actual factory overhead is equal to applied, no, I'm sorry, if actual factory overhead go to page 789. So if actual is greater than applied, then it's under applied. Overhead is under applied. But if actual is less than applied, then it's over applied. I don't like the way that looks. Down. Here we go. So the little bubble. Tell me again how you use POHR. What is POHR?
Predetermined.
Good. To assign overhead to jobs, we multiply the predetermined overhead rate times the number of activity units, direct labor, incurred for the job. Reasons for using predetermined overhead rate: overhead is not incurred uniformly during the year. Actual overhead rate might vary from month to month. Predetermined rate makes it possible to estimate job costs sooner. So it's just used as an estimation tool because you won't have it right away. Now, predetermined overhead rate is based on estimate. What happens if actual results differ from the estimates? We just talked about that, right? If overhead, if applied is greater than actual, what happens? That means actual is greater than applied. What is it, over applied or under applied? If actual is greater than applied, if actual is greater than applied, it's under applied. If actual is less than applied, then it is over applied. It's in your book on page 789 at the bottom, highlighted.
Yeah.
This is all, it's just the same thing over and over again. It just gave you some fancy pictures. Now, this is also saying when we're looking at under applied and over applied, how it affects cost of goods sold. So if actual is greater than applied, we know it's under applied, which means that it cost of goods sold is what? Too low. And so the adjustment would have to be that we have to make a journal entry and increase cost of goods sold. If the actual is less than applied, then it's over applied, which means cost of goods sold is, which means obviously you're going to have to do a journal entry to decrease cost of goods sold.
Yeah.
No, you don't say yeah, it's done now.
It said and no structure like
It did, but you're not supposed to say yay. All right. So you got your problems for next week, right?
Yeah, you are going to send her this one.
send you this
Yes,
lecture.
go ahead.
Yes, please.
All that's gonna be on the front page. And I'm gonna send you notes from chapter 18. And I shall